Welcome to today's market report. European stock markets are seen opening lower on Friday, with the fraught Brexit negotiations prompting caution even after the ECB extended its bond buying program and the COVID-19 vaccine rollout continues. The DAX futures traded 0.1% lower, CAC 40 dropped 0.1%, FTSE 100 fell 0.1%. Talks between UK and EU this week have ended without a breakthrough, although the two teams of negotiators are continuing to meet ahead of the Sunday deadline. There appears to be little chance of success without fresh political compromise. British Prime Minister Boris Johnson said on Thursday there was a strong possibility Britain and the EU would fail to strike a trade deal. At stake is around $1 trillion in annual trade at risk of facing tariffs and quotas if a deal cannot be reached before transition arrangements end on 31st of December. On Thursday, the European Central Bank said it will inject more stimulus into the region's COVID-battered economy, increasing the overall size of the pandemic emergency purchase program by 500 billion euros to 1.85 trillion euros and extending the scheme by 9 months to March 2022. This comes after EU leaders also finally signed off 750 billion euros of coronavirus relief funds, ending a month-long standoff with Poland and Hungary. Additionally, US authorities voted overwhelmingly to endorse emergency use of Pfizer's coronavirus vaccine, meaning inoculations in this country, which has seen over 285,000 deaths from COVID-19, are expected to begin as early as next week. On Capitol Hill, US lawmakers continued to negotiate over a broader COVID-19 relief package, but a deal before the Christmas break is looking unlikely. In corporate news, Zurich Insurance will be in focus after its subsidiary Farmers Group agreed to acquire MetLife's property and casualty business in the US for $3.94 billion. German airline Lufthansa will be focused to lay off 1,000 pilots in the second quarter if it cannot seal a wage agreement with unions, Chief Executive Spohr said on Friday. Oil prices edged higher on Friday, continuing the sharp rally of the previous session on continued enthusiasm that the rollout of the COVID-19 vaccine will result in a rebound in demand next year. Crude futures traded 0.6% higher at $47.06 per barrel. Brent rose 0.4% to $50.47 per ounce, climbing above $50 for the first time since March. Both benchmarks are on course to post their sixth consecutive week of gains. Gold futures rose 0.1% to $1,839.25 per ounce. On the FX front, the GBP-USD pair is again backing away from the 135 pivot. According to Commerzbank, it expects a setback with next support seen at the 131.29, the 55-day moving average. The Bank of England published its financial stability report, stating that the financial system has so far provided that support, reflecting the resilience that has been built up since the global financial crisis. UK banking system remains resilient to a wide range of possible economic outcomes. Headwinds to banks' capital ratios are therefore anticipated over coming quarters. As unemployment rises, business insolvencies rise from current low levels, and risk weights on banks' exposures increase. Major UK banks can absorb credit losses in the order of £200 billion, much more than would be implied if the economy followed a path consistent with the MPC's central forecast. The FPC expects banks to use all elements of capital buffers as necessary to continue to support the economy. GBP-USD holds on to gains above 133 on the FSR release, shrugging off no-deal Brexit fears, coupled with a push towards the contingency planning, weighing down the quote on Thursday even as the US dollar index snapped a 4-day winning streak. The greenback gauge currently extends the previous day's losses, down 0.13% intraday, but fears of a haphazard divorce of the ex-neighbours weigh on the quote. Regarding the euro's appreciation, the European Central Bank Governing Council member and Bank of France head Gauho said, "We are vigilant about the exchange rate of euro-dollar. All our instruments are available. The 500 billion euro of PPP stimulus program is indicative. We can do more." On the above comments, the euro came under fresh selling pressure. Euro-dollar hits daily low at 121.31, having erased gains so far this Friday. The dollar weakened in earlier European trading, with optimism of a recovery from the COVID-19 pandemic weighing on its safe haven status, currently trading at 90.797. This is today's market news. Thanks for listening. We'll see you next time.